Maruti Suzuki reported a net profit of 1,709 crores for the last quarter of the fiscal gone by. We have with us the chairman, Mr. RC Bhargava, to speak about the quarter gone by, the year gone by, and what's panned out ahead. Sir, in terms of the quarter gone by, what are the key highlights? Because the operating margins, the full year operating margins are a little lower than they were the year before. Could you tell us the reason why there's been that minor fall?
Only marginally low, from 15.7 to 15.5 or something. But the two major factors which were adverse this year were the currency movements and the commodity price movements. Both compared to the previous year were very adverse to us. So these were largely offset by the higher volumes, by cost-saving measures, and by this, the non-operating income increase. So more or less balanced out, but not entirely.
In terms of those, in terms of forex movement and in terms of the price of commodities, we know that that's a variable there. But internally, what's your outlook on those? Will they be a hindrance during FY18 also, or will they be more benign and are they likely to favor you more?
Very difficult to predict how currency movements will be for the next 12 months. But to the extent we can, we are hedging to protect the budget. But that doesn't solve the problem ultimately. In some of these things like steel and aluminum, you can't hedge. These commodities have to be done at market prices, and they are major cost elements. So we have to just wait and see what happens.
Right, so another thing that has been a question is the current cash reserves that Maruti is holding. A, could you tell us how much are the current cash reserves, and B, what does the company plan to do? Because the cash reserves have significantly increased over the past years and they stand at I think the highest point ever. What are the plans obviously the cash reserves that Maruti has?
Cash reserves are increasing because our generation so far has been higher than utilization, even though we have had capex budgets of around 4,000 crores. We do generate more cash than that. And since we don't have to invest in Gujarat, it's adding up. But we are taking up a much bigger program each year as we gain experience of acquiring land and building a much stronger sales service network. The plan is that the existing network will have to be doubled, if not tripled, to enable us to sell up to 3 million cars and service the much larger population of Maruti vehicles, which will accrue as a result of the kind of sales which are happening. So we are on that, and so that is going to take a lot more money than what it has taken in the past. And R&D is going to take much more money than what it has taken in the past. So both these factors have to be built in. We still don't know how much this will be ultimately. And it depends how land prices move and construction moves and such things. But we have to keep money for that.